icon. Mr. Babatunde has performance principles resolving around adding value and has adopted people performance, compliance, and culture as key focus areas in his day-to-day business life. Prior to joining EHA Clinics Limited, he was the head English West Africa cluster of Novartis. He currently sits on the board of the Swiss Nigerian Business Council as the Vice President and Treasurer. Let's make welcome Mr. Babatunde Ojo for a session.
Sorry, permit me to stand on existing protocol. And I guess part of the protocol is to move closer to everyone. So I'm in healthcare. So, and I see, okay, the picture is off. We're having an SME business clinic. So my style will be like consultation, you know, like you're seeing a physician, a free consultation. Although someone will say there's nothing free. If it is free, someone has paid for it. And so in that regard, I want to say thank you to the convener for inviting me to speak, and happy birthday to you. I hope I've not spoiled it. Thanks for all you do, and the simple prayer I'll pray is God bless you. Yeah, thanks. Thank you for this. And thanks to everyone that also have dedicated time to be here. Learning is one of the things that I, appreciate a lot. I'm a lifelong learner. My belief is the day you stop learning is the day you start dying. So for us to live, we must learn. And we also must be open to learn from anyone, whether contemporaries, whether those that are, coming up, even those that, maybe in one way or the other, seem like they are superior to us. It's just a matter of time. You will never be a novice twice, or you should never be a novice twice. There's a Yoruba proverb that says, "Oniberi okinshino." So you only ask questions because you don't understand. And once it's been explained, and you understand, or understood it, you are no longer a novice. All right? So I didn't get the memo that it should be that all speakers should, wear English dress. I also have jackets that are gathering dust. I have the privilege of working from home, so I always fall in the dilemma of not knowing what to put on. And I understand that the era we are now, you can never go wrong in a traditional attire. So that's why you see me decked like this on a good day. I won't put on cap. All right, so I'll be speaking about structuring for long-term success, focusing on the business finance side of things. I was talking briefly about what my delivery style will be. Because it's a clinic, please feel free at any point in time to interrupt me, especially when I speak on an area you are experienced in, or there's something you just want to clarify. The same way you visit the clinician or you visit a doctor, and as the doctor is speaking, you have something you want to clarify. I know we have a session for question and answer, but please feel free to interrupt me, and then we can address it. I have my note on my phone, and for some strange reason, maybe because I was rushing to come here, I forgot the phone at home. But miraculously, the phone got to me here because I have a PA that I'm not paying that got the phone to me. So I need to acknowledge, my wife that has come to support me. So thank you so much. But we also have a daughter that closes at a certain time. So if you see her leave, it's because I've sent her on another errand, unpaid errand. All right, so most of the things I'll be saying may not be new, but may be to reinforce what you already know, or maybe to add some things to it. So we're talking finance. And when we speak finance, the beautiful thing is in every area of life, finance is involved, especially where money is spent, And there's a Yoruba proverb that says, money says when it's not around. Nobody should discuss behind its back. The beautiful thing is, as business people, money is involved. So we are not discussing behind the back of money, right? So I think that's clear. A number of the examples I'll be giving will mostly be personal examples because those are the ones I have the, is it patent? Which one is it, sir? I don't, right of use. So I don't want to live here. And then someone pulls me and say, that story is not your story. That story is copyright. So for using it, this is the bill. We have Chief here. He's a senior. And lawyers can operate on both sides. Today he can support me, and tomorrow will be like, I'm supporting the other side. So some of the things I really would have touched on, I know, Chief would have addressed them as well. Because the foundation of finance stems from, first, why you are in business. And second, the form of agreement or records that you are keeping. And for me, you are not in business if there's no legal, framework to it. I think that is the number one thing. A lot of times, you hear people say, no, I can't work with that person. But the experience that they had was either because record was not kept, which I'll speak on, or they did not define what they are doing ab initio, right? Via a legal document. In some cases, we've not separated the business from the owner of the business. And they ideally should be two separate entities. In fact, they will tell you in law, once you register a company, it has become an artificial person. Thank you, sir. So it has become an artificial person. So every right that you have, your company has it. You can open an account, your company can open an account. You can sue and be sued, your company can sue and be sued. The same way you plan yourself, your company should also plan itself. The same way you can own properties, your company can own properties. So the first thing for me is separate yourself from your business. When you then separate yourself from your business, the path of managing the finances becomes easier. Having the two together, modeling the two up, is invitation to anarchy, right? And don't think about now. It's about the future. Our convener was sharing an experience where, so I can say that because you disclose it publicly, right? So was sharing an experience where, they were praying for opportunity. Opportunity came and they did not have all that they needed. So this opportunity that we have today is for us to prepare ourselves for the future. A lot of people will be like, I don't have the finance. No one is willing to support me. Then people show up to say, okay, I'm ready to work with you. Show me the records that you have. Say, don't you trust me? Yeah, I trust you, but what I'm asking for is I want to have, historical information of how this business has been performing. But then there's nothing. So if prior to now, there's no information that, you have kept on the financial side of things, whether it's, when you talk finance, at times we use some big words, we talk some big concepts and things like that. But 4 things are the major thing that you are looking at when you talk finance. It is your revenue or income. It's your expenses or your costs. That's on one side. That way, when you put the two together, you know whether you are making profit or you are not. Okay? Then you look at assets and liabilities. That is, what you own and potentially what you owe. That is what shows us what you've been doing. You may have been in business for some time. What have you been doing with the income? When you remove the expenses, what have you been doing with it? Or how have you been funding your business? It's either you own it or it's owed. So when we talk finance, those are just the things that are, in scope for discussion. So a lot of the things I'll be mentioning will be along that line. So I'll be sharing thoughts, I'll be sharing nuggets, but like I said, feel free to call my attention in case something doesn't, in case I didn't say something right. So I mentioned separating the business from the owner of the business. I believe Chief already delved into, business registration and things like that. So once that is done, from a finance perspective, what I'll be interested to know is what are your key objectives in business? Thank you. So it's on Facebook Reel that I see things like this. So I guess I'm gradually becoming a content creator too. You can still hear my voice, right? Yes. Or it's better with the microphone. Okay, all right. So I'll be interested in knowing what your objectives are, why you have gone to business, and what you intend to take out of it. There are people who have gone into business not necessarily to make money. In some cases, it's to help humanity, right? So the kind of record they would have to keep, in fact, the kind of structure to have, will be slightly different from someone who is in business to make money. If I go into business, or the businesses I've been doing, those businesses are to make money. Okay? So it's important for me to walk towards a path of profitability. Okay? There is nothing bad in starting off a business and not making profit from day one. So that's why it's also important to know what your goals, what they are. What only needs to be clear is charting a path towards getting there. I would emphasize record keeping again. That's what helps you to know where you are and what, steps and actions, you need to make. Okay? Who are your stakeholders? So the information that I gather, who are those that will make use of it? Of course, because you run a business, you are number one stakeholder. Who are the other stakeholders that you have? The information that they would need will be key. Because if you are, running a business and your stakeholders are not carried along, or they don't have the information that they require, it may as well be like you're putting them in the dark. Right? So be clear who your stakeholders are, and that also influences what you need to do. One critical stakeholder will be government. And I know my brother will come and talk about taxes and levies. So it also needs to be there from day one. One of the things I always encourage people to pay attention to, especially for the sustainability of their business, that they have to government. It can mar the best ideas. Imagine someone just waking up and gets to his business location and sees a bill of an amount multiple times the annual turnover. The person will be like, but why? You are running a business that is vatable, and you have not been remitting VAT returns on a monthly basis. For every month that you don't render returns, it is 5,000 naira, right? Or has it changed? 5,000 naira penalty, standard. Then they will now charge you interest on it. So for 1 year, if you don't run And how will you know what VAT to remit? It comes from your financial record. So if you don't have it, by the end of the year, you do business to make profit or you did not. 60K plus interest at prevailing rate is waiting. Multiply by the number of years. And you know interest is compound. So it is month 1, 5,000 plus interest at 20%. It becomes 5,000, no, it becomes 6,000. By the next month, it is 6,000 plus 5,000 plus 20% of 11,000. So by the end of the year, that 5,000 that we initially calculated at 60,000 may have gone above 500K, would have actually gone above 500K. Still trying to emphasize the importance of record keeping. Okay? Finance is at the heart of business. So wherever money is involved, finance is involved. I spoke about, the 4 things that are, I'll use the word finance and accounting interchangeably, although they truly in the deep sense of it don't mean the same thing, but they are related. But for the sake of our conversation, a lot of times I'll mention finance. So I mentioned the key words that should be of interest to you. It's your revenue or income. It's your costs, or expenses. It's your assets and your liabilities. So when you add up, when you deduct costs from your revenue, you know whether you have made profit or not. When you deduct your liabilities from your assets, you know what you own in the business. I don't know if it's clear. Okay? So if you want to know, I've been running this business for this long, just take all the assets the business owns and all the obligations you have to other people, what the business owes, deduct it from it, then you know what you have put in the business. A lot of people don't do this. Then you hear someone, especially those Yaloja, you hear, when I started this business, it was ₦1 million I put into it. This man now comes and says, I'm owing him 500. That one, at the end of the day, the person that put 1 million now realizes he or she is more indebted than what they put in. The simple reason is they were not counting their costs completely or overestimating their revenue. Or pocket may have linked personal pocket and business pocket. Okay? So those are the 4 things that I would be speaking on. So I'll move very quickly. What are then the key considerations? What are the important matters that as business owners we need to pay attention to relating to finance in business? The first and most important is record. The first and most important is record. The record of what the business that relates to these 4 things, those 4 things I mentioned: income, expenses or costs, assets, liabilities, to have them documented. We are in the era of technology, different accounting, very simple accounting softwares. Some of them comes for free, some at very little amount can help to keep those records. But if none of those, at the stage where the business is, are what you can access, a simple spreadsheet will help you keep record of your revenue and your expenses. In fact, if you cannot manage to update a spreadsheet, I tell you one simple document that can help you keep your record. Once everything about the business is separated and everything goes through the bank account of the business, that's your bank statement. Your bank statement is a resource that you don't have to pay for, that the bank in its own wisdom is already using to keep record for you.
If I take a 5 to 10 years bank statement of an organization, I have assurance that nothing happens outside that bank statement, including the initial capital that the owner of the business introduced, I'm able to show that business their financial statements over that period of time and show them whether they are making progress or things are going down south, right? But I need to emphasize again the importance of keeping records. Don't look at it as it's just too easy. No, it's difficult rather. It's actually easy. It's just how we manage our individual finances. Of course, businesses are at different stages, right? There are businesses where record keeping, you can, at the stage where the business is, afford to do it by yourself. And there are some where you don't have to disturb yourself. Engage a small firm to take charge of that for you, and you focus on business development. When we talk finance, it is because the business is bringing something in. Then we are talking about record to keep. And a lot of times the preoccupation of business owners is how to grow the business. All right? So this doesn't mean keeping record needs to be what you do by yourself. If, you feel the priority, the stage where the business is not what you can combine, right? Get a small firm. The beautiful thing is we all are here. Is there any firm here that's in accounting? Any startup firm that is, into accounting? No, we should have more of it. Maybe that's an idea for me. We start one together. Because yes, it's also a line of business that should run and should support other, businesses. So keeping record is very key. Leverage technology, where possible, and but keep your record. If you now don't have means to keep record, at least ensure everything goes through the bank. And from your financial statements, you have a record. In fact, if something happens in the future, I need to develop a full-fledged financial statement. Handing over your bank statement to an accountant, the person can pull out your financial statement for you. But again, ensure record is kept and make sure the record of the business is separate from your individual record. Let it not be that in the bank statement of the business, we see payment of school fees. They are two different things. Let it not be stipend to my wife. There are two different things. Run that. It's okay to, as part of, the business, pay yourself a stipend, right? Let that one be what is recorded. So if I put myself on a stipend and then I take it out on a monthly basis, from that stipend in my own personal account, I can do whatever I want to do. But let not those daily spend that are personal be what we see, in the business account. Okay? Another important thing is budget and controlling budget. Budget is within this time. This is what we want to achieve. And budget across those 4 areas that I mentioned at the start. Budget your revenue or income, budget your cost or expenses, budget, what assets you would want to keep, budget what liabilities you may need to have. It's not enough to now have those budgets set. It's also important that you monitor the budget. The budget is what drives you. If I put a budget of ₦1 million monthly, of course, I need to now, by the way, budget is not aspiration. They are two different things. Budget is like setting individual objectives. They told us it needs to be smart. So your budget also must be, specific, it must be measurable, it must be attainable, it must be realistic, and it must be time bound. So budget, for instance, can be January to December, or it can be quarter 1. So in quarter 1, what is the revenue that I would like to make. Of course, you now need to look at how will that happen. Under expenses, what are the things I'll spend money on? Okay, then you work towards it. Budget is not I do it, I keep it at the back. You actively work towards it. And this is important not just for SMEs. It's also important for large organizations. So in the business where I work, we have a budget for travel. And then in January, we had some one-off activities, board meeting, annual kickoff meeting, this one, that one. And I realized our travel spend in January was already 80% of our travel spend for Q1. By, when we closed the books for January and I was presenting the, books, I simply told the leadership team, it's either we cut down significantly on travel in February, or by the end of February, there'll be travel freeze. Which means whatever you want to do, you do it from where you are. No travel. The reason is very simple. If we make the budget and we don't control the budget, we will spend and justify why we are spending, not knowing that we are hurting the business. Because it's either of two things. You either have to earn more money to cover your expenses, or you need to charge your customers more to make more money. One way you need to make them, or maybe the third one is you deny yourself on other areas to cover for some other part of the business. And don't forget, whatever you are doing, you are not the only one doing it. Competition is very, very fierce. So if your pricing puts you at a disadvantage because you want to travel more, and some other person looks for opportunity not to travel and still deliver the quality objective of the business, that person will likely have more business than you, and the business might probably grow faster than your own business. Budgeting is key. Make the budget, have it written down, follow up on it, and see where you are. Once you have it, it becomes easier to look for ways to bring improvement. So there's something called productivity. Productivity is simply trying to do more with either the same resources you have or do more with less resources. So if you don't do your budget and you don't compare your budget to actual, you are not able to think of productivity. Productivity is what made Gala to not increase from 100 naira, but they thought of other things they could do, like reducing the sausage inside the Gala. But we still will buy the Gala and we will eat it. But if they continued running it, at some point we just go to the street and not find Gala, or UAC will just be dead. Why? Because you just realize things are not what they are. They probably are asking for more money, either from the owners or borrowing more money to fund their activity. Don't forget those 4 areas that I said we need to always pay attention to, those 4 key things in accounting: your income or revenue, your expenses, your costs, your assets, your liabilities. They all are interconnected. So if you are losing money, spending more, making less, the likelihood is there that your liability will increase. If your liability is not increasing, then it's one of the owners of the business that is injecting more into it. And let me just say this: once a business is set up as a standalone, as an artificial person, like a registered company, whatever you put in as equity, your own resources that you put into it, has actually become liability for the business. So when you are talking liability, Liability is not when you go out to borrow money. When you put your own money into the business, it has become a liability for the business. They owe you. Depending then on what you have as objective, the business will either pay you back. The expectation will be, if I have an objective, the reason why I set up the business, then I will expect the business to pay me back based on that. If my reason is to make profit, if I inject money, I would expect that the business will give me profit. If it is to create impact, then I'm not expecting financial returns. It is impact that I'll be expecting. Okay? So I'm trying to emphasize again budget and budget control. So I mentioned business is business, separate business finance from personal finance. One other key thing, and an area that is like a pitfall for most businesses, is managing liquidity. They say cash is king. You run business, most of your revenue is not coming back to you. It is that people are owing you. Then you look at this one, it's been a while. Okay, you owe me 100K. If you pay me 80K now, I'll take the 80K, you can take the 100. If you do that for a number of your customers, before you know it, you would have lost a quantum. So as a business, your sales is never complete until the cash has come to you. So it's not enough for you to sell, whether it's goods that you are selling or services. You must ensure that the final cash comes to you. Okay? When businesses are young, it's always difficult to set the rules. Like, hey, you only pay me cash. If you don't pay me cash, I'm not doing business. But as businesses grow, you need to find ways, to make others understand that your money that they hold is a cost for you. Even if it is your own money, you could as well just put it in the bank and earn interest. But if it is in someone's hand, that person is the one taking benefits. You are losing that opportunity cost, that income. Your opportunity cost will be what interest should have come to you that you are not having. Okay? So while you are planning how you increase revenue, plan how your cash will come back to you. It's also important to note that cash is different from profit. So you will forgive me, I started my career in Lagos in a beer company, Nigerian breweries. So I was selling beer. Okay? I won't say more than that. But one of the distributors, the business was expanding. But as the business was expanding, she was actually owing more. She thought the business was growing. My finance background then, I was calling her attention to it. Mama, most times they are Mama. Mama, this thing is not working. Where is this money going? We didn't know Mama was building mansion. Because she was seeing cash. But what she did not know, as of that time, a crate of, Maltina, let's use the non-alcoholic one. A crate of Maltina, the empty crate, 800 naira. Okay? So, to inject more, to realize more revenue and push product out, the breweries then loaned them crates. And it's in multiples of 70, A long trailer is 1,400. A small one, 1,050, I think. Then you have the one that is 700. You have the one that is 980. So when you calculate a 700 crate truck, the empty crate is 560K. So the brewery then loaned them as much as you can take. Because normally you should send empty bottles to the brewery So they give you full, okay? But they loan them. But Mama was seeing huge money in her account, not understanding that the crate that she has not returned is not her money. So this thing is not, when she now started returning the crate, she couldn't buy again. I'm like, what's happening? It was later I realized she was building, because there was cash. So she saw the cash as profit, but it's not. Your cash can only be profit after you have recognized every cost and taken into account every obligation that you have. I bought this thing. We do a lot of buying and selling in Nigeria. I bought this thing. I have not paid the owner. So when you get the money from your own customer, the money you got is not all yours. You have to deduct your expenses and deduct the refund, of the cost of the product. What is left is what you can now take as yours. So the reason why managing liquidity is important. My style is to avoid keeping excess cash, whether in bank or on hand. My nature is money is for the spending. And so once I have cash, even that I have obligation, when those obligations are not due, I look for risk-free areas to put the money into. Underline risk-free to put the money into, because it is not my money. I just want to take advantage of the gap between when I receive the money and when the obligation will go out. So I can say this, my wife has left. So we started one business. We were selling. So we had, one large idea of a Christian resort center, okay, where we would be able to have people like you come around with your families, have, Jews, have your meetings and things like that. So we grew up in Ibadan. I grew up in Ibadan. She grew up in Kaduna. So we went to Ibadan. We got, a piece of land in the bush. So it was cheap. So we got it. We kept it. Said yes, development will get there. So we can build that resort center or a retreat. Okay. What are now the businesses that would be part of it? One of it is juice, wine. So we started a business. We call it juice and wine 0%. So I saved money, I put it down. This is our capital. We got a store towards Agege. That's where you have a lot of juice distributors, all those Chivita, this and that. We got a shop close to them. So we filled up the place. We're doing good business. Cash was coming. Then expiries were coming too. So there are days I'll just go there to encourage her, because when she's looking depressed and the expiries, say, okay, just bring this one, bring it home. So instead of drinking water at home, we're drinking juice. We're always happy. People come and visit us. We'll give them, no, you can't take that one, go with it. So, and business was booming. Then one day I got to the store. There are spaces here. Say, that maybe when the person that went to buy new store comes, maybe we'll fill up the place. And indeed, the person came. And I saw what the person bought. This wasn't as much as we were buying before. My wife studied accounting like myself, and she was keeping record. The only thing was, rather than her telling me that this is how much you have told us to bring home, she was just recording it. She now brought out a book and showed me, this is how much of the business that you have eaten. I looked at it. I now said, why did you not caution me? Say, but anytime the thing we are, it's short dated. Rather than the two of us discussing how can we push this thing, our easy way out is take it home. So we're paying attention to our cash that time until the cash that we had couldn't refill the stock that we needed to. So you see the importance of managing liquidity. If we had managed liquidity earlier, we would have seen that. She also would have called my attention to it earlier. Say, all this, take it home, take it home. Yes, it's nice, we're drinking juice, we're living large, but we're eating what was supposed to be business. Also speaks to all the things that I said at the start. We were mixing individual business with business's business. Okay, so liquidity is important, cash is king, right? So when your distributors, also when your customers are asking for easier terms, let them understand, yes, you want to do business with them, but if they want you to continue to exist, they need to pay you. Okay? The next thing is, don't count your chicks before they hatch. All right? Closely related to liquidity. Your profit is not your cash. It's after you have removed expenses. So when I joined the company I work for, so they had opportunity with COVID-19. And a lot of companies, healthcare companies, had COVID opportunity. And wanted to buy AC for one of our new facilities. Said, okay, let's get Italian type of AC rather than, window AC that, everything will be hanging everywhere. Let's do HVAC system. They did that one before I got there. So they did HVAC system. And it was just yesterday. One of my team members was telling me that there were computers that we sent back to, so we bought those computers through Amazon and we sent them back because there was whether fault or something, or it didn't meet specification, and we didn't follow up again. He only discovered now and said, oh, we have about 10 computers that should be returned to us. And when we looked at the cost of shipping it back to us, to be honest, in this case, it actually was better than going out to buy new computers. So let them ship it. We'll pay for the cost of shipping because it's just shipping. It's not the cost of the item itself. But what made it like that? The company was seeing cash. People were coming to run COVID-19 tests. And the spending was in line with the cash that we're seeing. Businesses have life stage. So if you spend all of the profit you are making today, there is nothing you would use to grow the business, except you want to remain at that level, right? So part of our obligation as finance people is then to call your attention to that. This is where we are. So that's where we want to be. What do we need to do today to get to where we want to get to? So when your finance person comes to you and say, this is how much profit we have made, don't immediately distribute it as, the way companies will do. They immediately distribute it as dividend and say, we've made profit. Oh yeah, let's take it. What part of it do you need to reinject? In fact, there's something accountants do. They keep reserve. Tell your accountant, whether it's the one that you have engaged or you yourself as the accountant, to make reserve booking. Just put it there. Do not spend. Depending on your capacity, it might be 5 million today, it might be 1 million, but that money that you set aside will go somewhere. I know we just had lunch and I had a difficult work of keeping everyone awake. I'll try my best. One next thing, right, is I'm sorry. Monitor trends. You can only monitor trends when you keep record. Trends will show you, there are some businesses that are seasonal. So if the business is out of season. Let me give an example of a business that you may not like, but that is seasonal. It is selling malaria medication. There is more malaria during the rainy season than the dry season. So, if you are in the business of distributing pharmaceuticals and you are now not selling malaria medication well during the dry season, don't fear. Calm down. Your time is coming. Your time is coming. Okay? But how you know that is when you monitor trend. And a simple way to monitor trend. See that your Excel. So if you put your monthly revenue or income, you put the total. January 5,000, February 6,000, March 7,000. Just highlight all of them. On the upper deck, I don't know the name they call it. On upper tab, you see something called chart. Click on chart. Let it either do bar or line for you. Then look at the line. How is it going? Is it going up like this and coming down like this? Once you now see it, ask yourself, because you are a business owner, no one would know about the business more than you. Ask yourself, what happened here? So I gave example of, the company where I work and our travel spend in January that was high. We could as well start screaming and say no more travel. But, looking at our trend, we knew that in January our travel costs will be high. Right? Because there are people who will travel from overseas, there are people who will be here, they put all of us in a hotel. We will not have it twice in a year, it's only once. So if you monitor your trend, you would have explanation for certain things. If anything now looks out of place, you should dig deeper and understand why. So monitor trend on revenue, monitor trend on expenses, monitor trend on your assets, and monitor trend on your liabilities. Once your liabilities start increasing and there's no commensurate increase on your assets, you should ask yourself, where is the money going into? Because if your liability is increasing and your assets are not increasing, then it means you are losing money somewhere. The only other place you will find it will be your revenue and expenses. What it simply means is you are having more costs than revenue. And once you see that, you take action. I need to mention this. Financial numbers are not meant to just be kept. They are meant to help us to make informed decisions. So when the business grows and you have finance person, and all your finance person shows you is our income is 5 million, our expenses is 3 million, our profit is 2 million, and stops, you don't have the right finance person. Your finance person should be able to tell you, what does this mean, and what action is it proposing, the organization to take. It's now left for the business to take to the advice or not. But at least he would have shown, hey, this is it. Similar to what I did with travel costs, to say, hey, our travel cost is high. We spend 80% of Q1 travel cost. By end of February, if there is no change, meaning, we've faced our travel budget. So on a monthly basis, we know how much you need to spend on travel. Because you've spent more in January, doesn't mean February must also be that high. A lot of the travel in January were one-off. So in February, we should be able to catch up. So if we are now not catching up in February, then action needs to, happen. If you now propose the action, and you as a guy in the business say, no, it's okay. We can't be doing that. Let people travel as they like. If by the end of the quarter, we then are significantly above budget, it won't be the fault of the finance person. By the way, it also may not be wrong for the owner of the business to say, leave travel. I know we would have overrun on travel. Might have his reasons. The reason might be we need the travel now to build sale. Because if you don't do the travel now, at times some businesses have the lead and lag effect, where what you do today, the impact will be felt down the line, right? But some business, if you do it now, you get it now. Take Nigeria as an example. If we are not spending money on oil and gas infrastructure, and we are saying in 2 years' time, we want our daily crude production to hit 3 million barrels per day. If we don't do it now, we'll get there and we'll still be struggling with 1.6, 1.7. Why? We've not done what we should do now. So it doesn't mean immediately travel is high or one thing is high, something is wrong. What your finance or your financial information that you are keeping should help you to do is make very informed decisions. Okay? All right, 2 more things and then I will stop. Risk management. It's also a key thing to pay attention to. When you are in business, you are not operating in a cocoon. You are not in an island or on an island. There are things that you can control. There are things that you cannot control. Paying attention to those things and the impact they will have on your business is also part of managing your finances as a business person. Okay? We've been joking about USAID and the impact that is having. Not like it had it. It's still having it on some not-for-profit organizations. Right? So in some cases, if the organization has tried to diversify its portfolio, that might be a way of mitigating the risk that is inherent in their business. Some businesses lost a lot when we had the forex instability in Nigeria. There are things that one could do to at least, even if not fully, partly mitigate those exposures. But if you don't do any risk, if you don't carry out any risk management activity, then you won't know what your risks, what they are. There's something called pests in trying to assess your environment and then know where you may have risk. PEST is an acronym for, when you look at your environment, your political environment, your economic environment, your social environment, and your technological environment. The MD of Nokia said one thing one time: we did nothing wrong, but somehow we failed. Thank you. I just lost that line. We did nothing wrong, but somehow we failed. Why did they fail? They did not manage their risk well. When Econet came into Nigeria, the choice of everyone, because it was very rugged, was 3310. If you did not have Nokia 3310, you have not arrived. In fact, you even get that see-through pouch, the one with zip on the side, and pull it round. To the extent that the pouch would take the form of the keypad on it, and Nokia was balling. Have you asked yourself, where is Nokia today? Where is BlackBerry today? It's their technology. Technology changed, but they did not evolve. But there were some companies that, yes, technology changed, but even that technology changed, they evolved with the technology or even focus on some other areas. Canon is one of them. Canon is into business equipment, photocopier, cameras, and things like that. Canon cameras before was using film. When things moved to digital, Canon moved to digital. If you know how expensive, maybe one of the cameras that is capturing me is Canon. The owner of the camera can tell you how much Canon cameras are. They are still in vogue. In fact, have become more expensive than what they were before. What happened? Canon managed their risk and they evolved. That's also very important for us as businesses. And the right time to start was yesterday. The next best time to do that is now. So manage your business, manage the risk inherent in the business. I worked with Tetra Pak. So as of the time I joined Tetra Pak, we count packs, number of packs. You know, Tetra Pak is the one that does all those juice packaging. Was low. Then Obasanjo came and banned importation of juice. The first juice that left the Nigerian market was Five Alive before they finally came back. But you know what? When that happened, Tetra Pak started boiling. That was when Chivita came, TGI. That was when they came into Nigeria. And they became the king of juice. Chivita, Fuman, all of them like that. Political decision changed. And then the fate of one company was better. I'm sure at that time, NBC was worse off for it because they were only importing. So part of why you need to manage your risk. How do you manage the risk? List out the risk that you see or envisage could be in your business. And ask yourself, is there anything I can do to change it? There are things that are within your control. There are things that are within your influence level. You can't control them, but you can influence them. But there are things that are outside, completely outside of your control. Those things that are completely outside of your control, the only thing you can do is pray about them. But the ones that are within your control, take action. All right? The ones that are within your control, take action. Forex, from a financial point of view, how can you manage it? A natural hedge is ensuring that the currency of your revenue is similar to the currency of your expenses. That's a natural hedge. Where one loses out when Forex fluctuates is when the impact of Forex on revenue is different from how it impacts costs. But if it impacts them the same way, if Forex makes your revenue to go up and it makes your cost to go up, you are fine. You don't need to break sweat. You know, if Forex unfortunately makes your revenue to come down, but at the same time also makes your cost to come down, you are also safe. But where Forex makes your revenue to come down, but makes your cost to go up, that's where there's problem. So the question there will be, do I need to change my pricing mechanism? Yes, I buy product from Dubai. I come to sell here in Nigeria. And those products, I use Forex to buy them. What it then means is you can't just give prices. Yes, dollarization is a law that we cannot break. But nothing says you can't quote in dollars. Just that you cannot receive, I hope I'm not wrong, you can't receive.
You cannot price in dollars, you cannot receive in dollars. Or you can do the exchange in naira and peg it as your price.
As your price. So if I tell you, see, this thing that is coming, if it has been worked at 1,500 naira per dollar. So if within this week it remains at that level, this price stands. If it changes, we would rework at the prevailing exchange rate. You have kind of edged your risk. So pay attention to that. Okay? So pricing is also very key, especially where products have, or where your price has element of foreign currency in it. On a final note, when we talk finance, and I hope I've kind to disabuse our mind and try to make finance look like it's not something out of this world. When we talk finance, while counting it is important, while keeping financial record is important, what is much more important is what you do with it. What is much more important is what you do with it. But you don't have to wait till you have something to do with it before you start keeping adequate financial records. So I'm part of the Swiss Nigerian Business Council, and we have engagement with different weather organizations, different entities, and things like that. And there was some engagement with GIZ, I think German, it's a German thing, right? They were trying to fund some businesses, and they were now asking, okay, can we know where you are, so we can know the capacity you have, for the funding. And was open to SMEs, just like ourselves. A lot of businesses came with financials that you could say it was ChatGPT that did the financials for them. It did not reflect anything. Someone comes and shows revenue 30 billion. I'm just giving that as example, like illustration. Revenue 30 billion, cost, whether direct or indirect, 20 million, profit 5, let's say 10 million. You make 10 million profit in a year, you are now looking for financing of 3 million. Even for 1 year profit. Yeah, okay. So it became clear that this is not the financials of the business. It was ChatGPT financial, or what's the other one now? The one from China. DeepSeek. They say US invents, China scales, Europe regulates. You get it? And then some other person was actually bigger than the financial that they were showing. There was one that I saw, and someone I knew very well. But apparently, the bigger part of this business wasn't going through the business account. The bigger part of the business was going through personal account. So he only prepared a financial statement that his bank statement could justify. But his business was bigger than that. Okay? So it's not enough to keep records. It's not enough to separate records. What is much more important is what you do with it. And as they say, life is in stages, men are in sizes. The business may be small today, but the business will not remain small forever. The habits and the financial discipline that we keep today are the habits and the financial discipline that will go with us into the future. There's been cases of small businesses, that will start today, and someone just comes and says, I want to buy over this business. And the basis of the conversation is not what you tell them. It is what they can see. So if you don't have what they can see, and you think I'm only doing this business for myself, the maybe 100K that you give an accounting graduate to try to put record for you will in the end pay off itself. All right? So objective, very important. Keeping financial record, very important. But much more important is what we do with the financial information that we have. Thanks again for the opportunity.